Testing, testing. All right, we're good. All right, ladies and gentlemen, we're back again for some fun. Anyhow, I just want to disclose something I've noticed, especially with US 30. Haven't really checked up on it on Nasdaq. Really don't like Nasdaq all that much. I see it in SPX a lot, um, and this strategy involves scalping. Now, what this scalping strategy is just sitting on the 5 minute time frame with no bias. All right. It's very interesting as to how this always plays out with equities. I've I just now started seeing them, and only during um, the New York session, not Asia, not London. Sometimes you might find one and it'll play out super well, but mm-mm. I want this price swings, highs and lows. That's all that matters to me. Now, all it is just sitting on the 5 minute and then watching for what's called rejection blocks to form. Now, here's a good example of one that I saw today in US 30. I put let's see here. Yeah, right here. I put a sell limit right to this exact value. Um, and price action just, it's like 0.80 pips away from my sell limit. It was like at the hair. That's how thin it was. It was ridiculous. But anyways, so the idea is that we're just watching, we're sitting on the 5 minute, and we're following price, right? So in this instant, we have a green candle, right? Next candle over sweeps the high of the body out right here, and the candle closes below the body of the previous, or the body low of the previous candle. Immediately, there's a rejection block right here, and we got the minimum threshold for entries. Now, something else I've noticed is if there's a wick like this, you will want to find entries in in the length of this wick. What offers you sniper entries is at the minimum threshold, the mean average threshold, and then the uh, rejection block high, or high, excuse me. Um, Anything above that offers sniper entries, but typically entries at this exact point is sufficient. If you could find entries here, even better. You're just risking, or your lot sizes are going to be a whole lot smaller, but you got stops sitting right up here. So, and we could see price never exploded past this high. So anyways, we got a rejection block forming here. PA just immediately started melting off. No, and this is what I like to see is once a rejection block is formed, I'd like to see the next candle over indulge back up into this area, offer perfect entries here, if not here, then if not here, and then for price to continue downward, and that will give you the next 5 minute or the next 15-minute candle wick, and it will leave no imbalance behind. In this case, it did. So, and one thing I saw, I wasn't even awake until like right here, but um, we had this fair value gap right here. Right? We didn't do any structure shifts right here. However, also at this exact low is the New York midnight price. Right there, right? I, for some reason, sometimes I just see this a lot where this exact price level becomes support and resistance all the time. I don't know what it is, but maybe it's some hidden sauce. Who knows? Anyhow, so we're up here. Price rallies back up. We got some disgusting big candles here. Okay. So when I see this right here, we got a series of candles, and the this third candle closes below the previous low of this green candle. I like to think that these are Judah swings. Sometimes they play out, sometimes they don't. Sometimes this is the exact high of the day, and it will never see it again. Um, I really don't trust getting into trades because of that. You know, we got a fair value gap, trades up, um, and then it just trades sideways. And this is when I was starting to pay attention. um, as soon as this candle closed right here, down here, I was like, all right, we're gonna wait. We're gonna wait for it to get to this wick. Never does. I saw it come up. I'm like, maybe it's best to get in early. Nah, I'm not. I'm gonna do. I, I'm I'm skeptical of this trade. I didn't get in. Oh man, that was regrettable. Regrettable. Now, you see how I could have chased price action right there and it would have delivered perfectly, right? Even here, if you chased, it would have delivered. Now, there's another thing I noticed during the lunch of New York was this candle closed above here. It's minor wick, like tiny, tiny wick uh, it made here. Price came up, offered entries here and here. Oh, and it went for the absolute extreme. So the people who got into buys here after this candle, you know, they put their stop losses here and it rallies without them. Now, something I've noticed to this strategy of mine when it involves chasing. So let's suppose you chased these buys right here. Like as soon as the 5 minute close, boom, you're in. You know, where would you put your sell loss? Oh, immediately down to this exact low or just a few pips more, right? But as we could see, to this exact low, it ran 5 pips lower. How would have you known? Maybe it would have been safe to do 10 pips after this entry from the low. Uh, so right here, 321. You could have done that, but let's say that you don't trade with a stop loss and you're in buys right here, and immediately price action just starts diving, 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 diving. Do you close the position? Now think about it. If your analysis is right based on this scalp right here, what you should do when it comes to exiting the position and closing at a loss is if this candle right here closed below the low of this wick right here. Interesting, eh? So if you held on to the buys, let's say accounting spread, probably entries probably would have been like right there. So 33 pips, 100 lot, that would have been what, $3,300 in drawdown. It's a little heavy, but you know, it's doable. Now if it was a 50 lot, 1500, oops. No, it'd be like 1650, something like that, and then so on forth based on division of 2. Anyways, but we can see that price immediately sprung. This could have been your little Wyckoff situation where you saw a spring right here. I don't even think this is Wyckoff, but anyways, you know, price continued to rally, and then right here on the 15 minute, I saw this. It was a fair value gap. Pro pointed it out because also on the 30 minute, this was, I think, like it was something like this on the 30 minute. Like, you know what? Let's just go to it. Ah, yes, sir. Right there. pro was looking at it on the 30 minute, started to ping off of it, and then sold off. And I thought, me being on the 15 minute with this fair value gap, and it got pretty close to the 50% mark, I was like, yeah, this is sufficient. It's probably going to go down here. So I think what was it, down on the 5 minute, I hopped into late sells right here, immediately into profit. I'm like, let's go. Now, something that got me worried was this red candle did not close below the wick right here of this previous green candle. Because if I had done that, immediately order block right out of the gate, bearish too. And if it made this green candle, I would have been holding my shorts no matter what. Now we see price rallies, and there's a reason why I did. All right, if we go back to the 15 minute, and remember if we had gotten into buys based off of this 5 minute analysis right here. So let's do that. Let's go back to the 15. Notice something interesting. This green candle goes above the high of this wick. Fair value gap. Price rally down. For entries right there, I don't even think you saw any drawdown. 4 pips. That's enough for spreads to get in. So if I had seen this on the 15 minute, I would have put break even right here and then partialed, if that. And then price rallied to hit my stop loss. Kind of upset about that. And then I just sat down. I was like, all right, it's going to go up here. It's going to go for the extreme. It's going to liquidate this exact high. Oh, why does it do this? Let's do the center. Okay. Since this swing high right here didn't mitigate this green candle, I thought that's where it's going. That's where it's going to end up going. And I put a sell limit, like I explained, right there, barely touched it, and then just started nutting down. I FOMO'd a 30 lot in there, and I was like, let's go. Do or die, right? And then, as soon as this candle right here closed, this red candle, I was like, this is it, boys. As soon as this 15-minute closed, I was back in. I was in shorts again. But this time I pushed stops to there. I ended up getting out like right there. Terrible RR. But anyways, you could see on the 5-minute, we swept the extreme high of this wick, or the body high right here. And then we closed below the body. Short. We're in. Go for it. Indulge. Dive. And I think on the 15-minute as well. Yeah, as soon as this 15-minute candle closed, guess what? I was back in again. Oh man. When you have stuff like that following up from the lower time frame up to the higher time frame, this can be very powerful. Now, something I saw on the 5-minute here is I've never seen anything like this before. This was super whack to me. But this green candle came up, swept the low of the body, closed above the body. What is your natural instinct to think based on the scalping strategy? Buy. And your stops wouldn't have hit until right here. You would have closed out. So if you had entries at the minimum there and you closed right there, that's 67 pips sell loss. Oof. That hurts. This is inducement. Hardcore inducement. And I sat through shorts in this crap. It was annoying. But you can see, typically, when a rejection block is formed, it typically shows the exact highs and lows of the day. It is so pinpoint accurate. It is absolutely insane. Price rallied downwards, and partials were taken here. Now, we took out a low. I was expecting, price to come up to here, where we'll see continued shorts. Nope. And I was thinking of buys because the extreme confirmation that was right here. Red candle, green candle, swept the low of this wick right here. Rallied above, closed above the body and the wick. I think I can confirm that. Yep. See that? Done and done. Now, I was thinking of buys. I really thought of it, and just when I figured out about trading without a stop loss and scalping, if I had entered my trade here and just absolute FOMO'd in, would have seen about a 50 pip, 46 pip drawdown, which isn't that bad, but you could see that the candle never closed. This candle here never closed below this low right here. All right. My thoughts on this is that price action is collecting more sell losses before the real move happens. And not to mention, in the ICT scalping strategy videos, he talks about, it's strange. I still cannot understand it, but I can see it. It's a 3-bar pattern, and it's based off of the lows of the wicks. This would be a lower low. This would be, is that right? Higher low, lower low. Okay, that should be lower low. And this should be something like higher low. No. Man, I'm bad at this. I just reviewed the content, so chill out. And then this one right here. Right. Talks about this. Now, if I had seen that, I would have known to get into buys. And I thought this was dumb because I thought it was going to deliver to the New York midnight price, like to the dot, and the day would end. But it rallied. This entire down move just undid it all. Just removed the shoelace completely and ran 220 pips. So if you did a proper trade based off of this scalping strategy, you run your 10 pips below this low. See, that never gets close to it. 291. There you go. So right there at the end of the day, that's 1 to 5. That is really good. But you can see that this strategy is really good. And I've just now started trading them. It involves a lot of patience and a lot of, geez, I can't even explain it. It's a whole new avenue of trading. It involves intraday trading and scalping, so that, like, there was not a whole lot of reasons to buy right here, other than the reason why, it took sell side right here. Literally, like, what? 2 pips. Took the low of this right here by 2 pips. Like, was that sufficient to look for buys? I don't think so. But from what I've seen, sometimes it's as soon as we take a buy side or a sell side, start looking for trades in the opposite direction. And what better way than to sit on the 5-minute and then, or the 15-minute to trade price action. It seems to work out. I'd say this is a very effective way of trading. Um, yeah, if you got any questions, hit the comments. May not be able to answer your questions, but I'll try. So, peace.